You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking with Amy Goldrich, who is an attorney with Lynn & Cahill in New York. They serve both commercial and individual clients, and they have a very specific focus in part of their practice, which is on the art world. Amy, it's a pleasure to have you.
Thanks for having me. It's my pleasure, too.
I understand as a precondition of giving this interview that we have to be very clear that for all the listeners that you're not giving any legal or investment advice, because this is really just meant to be a general conversation. But let me, with that in mind, you advise people on art, and the big question is art a reasonable investment?
I mean, part of it is, how do you define reasonable? But generally speaking, no, it's not. Art does not behave like other assets. It's not it's hard to peg value. It's incredibly illiquid, very, very difficult to sell, very high selling costs, a great deal of, there's no fungibility really of the assets unless you're buying additions. It's hard to be able to know, is this work better than that work? Is this artist better than that artist? Is this period of work for an artist better than that period in the artist's production? It's so difficult to make comparisons, and it's so difficult to sell it as an asset that if you're buying this as a pure investment, there are better places to go with your money.
Okay, well, we have been talking to Amy Goldrich. Thank you very much.
Yeah.
It sounds like there's nothing to talk about here.
Well, no, that's not actually the case. I mean, I put out sort of a worst case scenario at the beginning because you can, different people are comfortable with different levels of risk. Some people are looking for, are comfortable with more risk. Some people can afford more risk. Some people really are looking for something that will help to diversify a portfolio. And for those people, it's something that can be appropriate, but you need to go into it with eyes open. You need to be smart about it.
There are certainly ways of diversifying a portfolio, but it sounds like from your introduction that as an investment advisor, my day job is that I'm a financial planner. I work with people developing portfolios. We deal normally with things like stocks and bonds and mutual funds, but we spend a lot of time talking about diversification. But I'm getting the feeling maybe I should say, by the way, buy your stocks, bonds, mutual funds, and maybe a piece of art and a lottery ticket to boot. Is it in the same class?
Well, I wouldn't generally put it in the lottery ticket class because at the end of the day, what makes art special, I think, is that if you buy it, you can live with it and get a great deal of value out of it, a hedonic value. You get pleasure from living with it, and you can descend it. You can't do that with a lottery ticket. For people who are collecting certain types of art, and I collect art, which is how I ended up coming into this area of the law. When I look at a piece of art and I'm deciding, do I want to buy this? The question I ask myself is, all right, if the price of this work of art is X, am I willing to basically throw that amount of money into a fireplace? And is it okay with me if this art is worth that much to me and worth zero to everyone else in the universe so that I will never be able to sell it? If it's still worth it to me, if I still want it in that way, then I'll go ahead and buy it. Mm-hmm. But that's my test. That's the way it works for me personally. Other people, can have a different approach to it. They're willing to take a little more risk. They're willing to buy things that they don't necessarily love because they have done their research and they feel they can rely on the advice of the people that they've gone to. There are incredible experts out there who can help you with this kind of thing. If you're going to be investing in art, you absolutely must do your research. There are huge differentials in available information. And that's a huge structural problem in the industry, but it's something you can work around by making sure you're affiliating with the right experts.
So we're talking about buying something which fundamentally has no inherent value, because
Correct.
presumably you simply believe, and again, let's talk about the people investing, not in an art lover, as you say, he'll buy something because it's worth it to him, in the same way that someone else might buy a car, or someone might buy a plane, or collect stamps or watches. Let's say someone's doing it as part of the investment. Is his only hope really that someone is going to come along later who's just more excited about it?
Well, yeah. I mean, if you're buying it with an eye towards selling it one day, yeah, your belief is that there will be somebody else who's going to be more excited about it and who's going to want to buy it for more than you paid for it. That's not an irrational hope.
It's like buying gold as well. I mean,
Exactly. And, at the end of the day, whether it's gold, whether it's art, whether it's something else, the value is just a function of collective recognition. If enough people believe that it's more valuable, then the money will go to it. You'll be able to sell it for more than you bought it for. Gold has more people sort of enrolled in the idea of value. This ounce of gold is the same as that ounce of gold, as another ounce of gold, because it's gold and there's a uniformity to it. You don't have that to rely on in art. So you have to make sure that you're doing it right, that you're doing your research, that you understand the market, that you're not moving in too quickly. There are a lot of charlatans out there is part of the problem here. In the securities world, you have licenses, you have to take tests, you have to sort of stay clean, there's all kinds of reporting and accountability, and you get none of that in the art world. One of the best pieces of advice that I got early on in my involvement in the art world was the admonition that nobody needs a license to do anything in the art world. Somebody can call himself a dealer without ever having bought or sold anything. All they need is basically a business card, maybe a website, maybe not a website, and a lot of chutzpah, basically, right?
That'll certainly help.
Because how am I going to know what he's bought or sold in the past?
Right. We are talking with Amy Goldrich, who's an attorney with Lynn & Cahill in New York. She specializes in art, among other areas of law. Amy, what does a lawyer who specializes in art do? How do you help your clients?
Well, I think this follows well from the last, what we were just talking about. As you do with every type of investment that you make, it's really important when it comes to buying and selling art that you do your due diligence. Due diligence about the item that you want to buy, due diligence about the people that you're dealing with, and you also want to make sure that you're handling the transaction in a way that protects you, whether you're the buyer or the seller. So, for example, you can buy things at auction, and that seemed to be a more policed marketplace. It's more open. We can see past results. We understand there are laws that govern auction houses. It's a little bit more out in the open. It's cleaner. You can see who's bidding and what's going on in the room. With private transactions, you don't have that. So, for example, with a private transaction, if I'm going to buy a painting that's worth $10 million, I'm not going to do that on a handshake or just, have somebody send me an invoice and I'll pay for it. There are a lot of things that go into evaluating, making sure that you're getting what you think you're getting. Not just you're buying a $10 million painting. Is it authentic? Is this the thing that they say it is? Is it real?
I see. So you really want to have a lawyer who knows to ask those questions, which is where the specialty comes in.
Exactly. There are issues of authenticity. There are issues of, is there clear title to it? There's still a lot of artwork out there, for example, that was owned in Europe, between 1920 and 1945. And, a lot of that work could have been taken by Nazis. And if it was, it's still possible that work, even though you paid good money for it, that work could still end up being subject to a restitution claim by the family that owned it originally. And that's still the case. And you need to know to ask these questions and to do the right kinds of searches to see if anybody has any, even aside from the issue of restitution, does anybody have any financial liens against the work? Is it owned by somebody else?
Is art something that you can put up to a bank as collateral for a loan?
Yeah, you can, and it can be used very well for that purpose. There are art lenders. There are people who specialize in this, and you can absolutely borrow against artwork. It's a really great way to free up capital and not have the tax consequence of selling, and to be able to leverage an asset that's just basically, it's either going to be in storage or on your wall or whatever. You can generally borrow up to about 40% of the asset value.
Okay, we're getting close to the end of our time, but you touched on something I just want to introduce, which is the tax consequences of being an art investor, both in terms of capital gains as well as estate taxes. How does that work?
Well, it's interesting because to be an art investor, according to the U.S. tax code, it's not enough just to buy a work of art and have it appreciate or hope that it's going to appreciate. There's a very detailed, specific set of criteria that the IRS uses to judge whether or not you're an investor. Whether you're a collector or an investor, you're going to be paying capital gains at 28% on sales. So it's not like stocks. You're paying a much higher capital gains. But if you qualify as an investor under the U.S. tax code, you get to deduct a lot of costs. Okay, so basically increasing your cost basis, you're going to be paying tax on a lesser amount. You really want to be treated as an investor for U.S. tax purposes, but to do that, you have to be able to show that your investment purpose is your principal purpose or of first importance. That your first goal is the appreciation of the asset or income from that asset.
So keeping it in storage would show that you were not interested in looking at it every day in your living room?
Exactly. That's one thing that can be looked at. Another thing they look at is, what is your record keeping like? Do you have good collection management software? Do you keep track of it the way you would keep track of your stock portfolio? In other words, business-like records, and use a business-like method for accounting for the purchases and for the collection. Do you consult with experts on purchases? When you're buying stocks or making other investments, you work with an investment advisor. Are you working with a professional art advisor? Somebody whose job it is to help you find the best possible pieces out there to be buying. Other things they look at, are you reading pertinent trade publications? How much time do you devote to the collection? Do you make an effort to display the collection publicly, which would lead to, which would enhance its value? And are you actually selling works? Are you realizing gains? You can't be an investor if you're not locking in gain. If you're just sitting and holding it forever, it doesn't look like you're acting like an investor. That starts to look like somebody who's a collector and is interested in keeping it around. So these are the kinds of things they look at.
Sounds a little bit subtle, but important.
It is. It's subtle, but it's important. And from an estate planning point of view, it's a wonderful asset to have. There are, you're going to have your issues of valuation. If your heirs are going to be inheriting the work from you, they'll get a stepped-up basis, the value on your date of death. You have to go through a whole process to determine what is the value of the art on the date of death, and you need to have a certified appraiser for that purpose. And you don't want to, there's no one appraiser who's great for every type of art or collectible you have out there. You want to find the right person for the type of art that you have. And the IRS can occasionally challenge that valuation. But other people are able to use the assets well. For example, they create charitable trusts that will, you'll get the deduction for that. You get all of that value put into a charitable trust. You can sell the art. You can do all kinds of things with that money. And use that trust in the way that you can use, other types of charitable trusts as part of your estate planning. You can also make lifetime gifts and get the tax benefit of making a gift to, a qualified not-for-profit institution during your lifetime, which is a great way to go as well. So there are lots of ways to be able to use it smartly But you don't want to just go in and buy something from the gallery down the street because that guy seems like a really great guy, and he says this is it's there are elements of you want to buy a watch that can come up. So you do need to be careful.
And you find yourself all tied up. We have been talking with Amy Goldrich, who's an attorney with Lynn & Cahill based in New York. She's a specialist in art. Amy, in the last few seconds, just tell people, how can they learn more about your work?
Well, I'm with a firm called Lynn Cahill, and you can find out more about us at our website, www.lynncahill.com. That's LYNNCAHILL.com. And if you Google me, you'll get other information, some articles I've written, things like that. And I'm happy to hear from anybody who has more specific questions.
Okay. Amy Goldrich, thanks very much.
Thank you.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt show.